Crude oil continues to spike. Geopolitical tensions continue to rise. And of course, markets continue to react here with a bit of risk off tone, not significantly bearish, but testing the bottom ends of the ranges. But first, we also have NFP report just coming out. We have additional key levels to get to as well, including in the crypto markets. Bitcoin, is it another bull trap? We'll look at that. And we also have, again, some gold levels to look at. This thing continues to be compressed and could be due for expansion soon. So a lot of levels to get to. Let's go ahead and get started with the first macro details here that we need to get to. And first off here is non-farm payrolls coming in at negative 92K. It looks like a downward revision to the previous. It was 130 previous, and we're looking at 126 right here. So that's a downward revised. The forecast was 58K, and instead we're getting a negative 92K reading right now. We have additional data points that came out as well. So let's go ahead and take a look right now and see what the market is doing. But first, let's look at crude oil. This is the one that's really spiking in a meaningful way right now. Big time upside price action here. You can definitely see, of course, the bullish price action here that's played out. Now, this is a price discovery phase that's continued to work its way out here to the upside. This is a weekly bands right here, and you can definitely see the upward flow, the bullish price action beyond the third standard deviation. And that's what we talk about quite often, is when you're looking at price discovery, is it pushing beyond the extremes here of a normal range? And normally you have a range that might be 1, 2, 3 standard deviations on either side of value, but once you get beyond the third and fourth standard, you are in a very highly bullish price discovery phase. This super bullish, you can see it's now beyond 84s. If we take a look at the daily time frame here, look at the stretch we've seen today, already a 227% of ADR day, a current range of $8.46. That's huge. Look at the stretch we've seen over the last several days. Over the last 5 days, we've averaged over $6 per day, nearly 7 there, $6.66. And now we are rising again. So this is something we've talked about before. If crude oil is going to continue pushing through these market structure distributions in this manner, it could continue to put pressures on the equities. And again, inflation fears come into play. Interest rate decisions come into play. Excuse me. So we start to see this whole trickle-down effect. And right now we are seeing big time strength here. Again, spike in crude oil prices, and that's leading to a bit of weakness here. So for crude oil, like I've said before, this thing continues to work higher even on a pullback day. It's not a sell or a fade. It's a buying opportunity until proven otherwise. And again, the 60-minute chart right now really proves that upward trajectory at the moment. Okay, I want to dive into gold for a moment here. This is gold, and this is the current 3-day range right here. You see that 3-day range? That's a pretty narrow range here. We can quantify that range down here with the ADR indicator. There we are right there. And this ADR indicator here quantifies range from the highest high to the lowest low of the specified period. And this is 3 days right now. 56% of average range. Look at the compression down here. Very narrow. And when you go compressed, you tend to build that energy for expansion. The expansion could be about 400 points easy. The last time it was 415 points. We go beyond that as well over here. That's also 350 easy in this move up. So there's been a lot of volatility here. And lastly, if we take a look at the wide 125% target, that'd be 340 points. So this 3-day range right now has, at the very least, 340 points of range, upward of 400 points. Which way are we going to go? I've noted before that we continue in this upward trajectory here. And so from current levels, if we were to break to the upside, 5,500 is right in view. This is what we noted before. It's just we haven't gotten there yet. It continue to build some energy right here. It's curious how compressed gold is at the moment, in the face especially of crude oil spiking. This big pullback was also curious as well, but we continue to maintain market structure at 5,000. So as long as we maintain above that 5,000, we have a shot to go get that 5,500. Again, if this range, 3-day range, has 300 plus points of energy pushing through the top of that range at 5,200, plus 300 gets you to 5,500. Plus 340 or 400, and now you're up to 56 and testing the key range high. So there's enough energy to get us to the key range high, not just 5,500. We'll continue to watch this compression here. That 3-day range could lead to a great breakout, but directional conviction is up to us here. You know, which way do we go out of this range? Just because it's compressed doesn't mean it has to go up. If we break at 5,000, then we drop 300 points, 340, 400 points. So keep that in mind as well. Okay, moving on. Let's take a look here at the ES. This is the higher time frame right now, and again, with oil spiking, we're seeing this thing pull back a bit. Now today, heading into the trading day, we were looking for a kind of an up-a-day rotation back within the range. Of course, so far we've gone inverted checkmark move down, and we're teetering on the edge of support. This is your quarterly midpoint right there for the ES. And that quarterly midpoint, very, very important. This is your previous quarterly high right there. That's your previous quarter's high. That's your previous quarter's mid. And this level right here is your previous quarter's close. And so far, bears have defended the previous quarter's high staunchly. They've rejected time and time again through the close, and now they're knocking on the door of busting through the mid. If you fail through the quarterly mid, there's no level left to go get other than the previous quarter's low. There's nothing else down there by way of the pivots. Now, there's other levels down here that could be in play, like 6,600, which is the market structure level, but we're on the edge right now. That level, 6760 here. I've also mentioned 6750. You know, in that zone, you fail. Now, we did test the waters here, dip the toe. It didn't quite break that day, but we could down the road. That's what's so tough with these ranges. You can definitely see the rounded top accumulation up here, or distribution in this case. You can clearly see it has the energy to perhaps lead lower, but timing is always up in the air when you get to these type of chop situations. We can dramatically chop back, dramatically chop again before we break. So is the break soon, or are they going to continue to hold off? Let's look at the 60-minute time frame, by the way. And let me know right now in the chat if you all like the intraday right now, want to see more intraday in the pre-market videos here. This is the 60-minute time frame here with the weekly bands. And when I showed this in the earlier live stream earlier this week, we were coming into this zone right here, which is R3 on the bands, and that's why I mentioned 6,900 could be the spot to sell for a rotation back to value and across the range here. Ultimately, it played out. It just took a little while. And then now, look where we're at right now. We're at the S3 on the wide bands for the week. We've been having a wide-ranging chop fest here, wide-ranging volatility. That's good too, right? You have a wide range of price action, a lot of good movement and flow within the range, but you're not really seeing price discovery out of the range. It's a trend day maybe at most, but you're getting lots of good reaction. So this is the spot right here to watch. We could drive a bit deeper, like we said, into that 6750 zone. But right now, this is a spot to watch. Can these markets hold this edge and return it back up toward VWAP to finish the week? Do we finish the week back at value during a flat trading range week, or do we fail at 6750 and go risk off heading into the weekend as we head into week number 2 of this emerging war in the Middle East. So key level to watch right now, 67.60, right in this zone. It's going to be very important. Okay, now let's take a look here at the NQ. Good morning, everyone. My name is Frank Ochoa, also known as Pivot Boss. I wrote a book called Secrets of a Pivot Boss. You can check it out in the link in the description below. Let me know if you've read the book. If you haven't, it's a great foundational piece here to help kind of build your foundational knowledge for how we look at the market and analyze it through a price and volume-based lens. Right now, this is one of our favorite tools at the moment here, and it is our PivotBoss Bands Pro Indicator. So it's basically our volume weighted average price with standard deviation bands using our proprietary calculation to kind of spread the data set. And you can see right here the NQ. Flat VWAP for the week, weekly bands. Price came into R3, found resistance, rotated back to value. A little bit of a pullback, and now taking value offered, which would suggest a continuation toward S3. Last time we hit S3 earlier this week, it was a bounce back up to R3. So the bands have been on point. With bearish price action, failed new high in the 60-minute time frame right now, this could lead to a bit more downside toward these levels, and then perhaps a little bit of a bounce occurs. But again, to take value offered here would suggest an extension toward the lower edge of the range. And that's the NQ right now. Still within the range, flowing back and forth, really good price action. We look at the, and again, when we look at the higher time frame NQ, we're still in the range here. This is a massive, massive range. I'm wondering here if this is a long form distribution pattern that we really need to be patient with and cautious of, because if this long form distribution breaks to the downside, how much of a market structure breakdown do we get? So right now we've been chopping back and forth, but the edge down here will be very important at some point. This is a big time compression, higher time frame. But right now, a lot of back and forth price action. So can't fall in love with directional conviction right now. And again, continue to mind your risk in this environment. Looking at, let's look at the YM here. The YM right now showing quite a bit more weakness, higher time frame against the NQ and the ES, for example. This thing right here had a massive wipeout day the previous session through the 48.4, which really opened up the downside. Stop run day down, massive 195% of ADR day. And today we are leaking lower yet again. YM has been leading down in a big way. And we talked about it right here on that day. That doesn't look good. And the head and shoulder looking pattern that was developing here. So when we had that, it was bad. This was a warning sign. And then when it took out the mid yesterday, that was very, very bad as well. So this is really, really shaping up in a very bearish way. When you have this market structure here, breakdown at 48.5, 48.4, wherever that level is, it opens up a move back to the prior pivot low. That's right here at about 46K. So we still have 1,500 more points to go get that target at the very least if this thing is breaking down, which it clearly is at the moment. Will it lead the ES and NQ lower? That's going to be the big question here. Looking at the 60-minute time frame of this one, look at this right here against the weekly bands. It has gone below the S3 band in the 60-minute time frame and is going bearish price discovery phase now. That's huge. You can see the upper band providing resistance, the lower band providing support. But right here it failed. Tried to maintain acceptance here, failed. This is very much risk off right now in the YM. Will it drag the others down? RTY down 1.8% right now as well. This is going to be something to watch in a big way as the YM leads lower right here. Now, what could get this thing bouncing? An extreme reversal in the next hour, a recovery of the previous session's low in the YM. Rejection and recovery of that low could stave off additional selling pressure into the weekend. But man, a failure to do so really begins to elongate things to the downside. Are we headed to 47,000 today if that happens? So previous session's low is going to be big. You can't recover that. Bad things happen. ES testing these lows right now into that 67, 58, 59 zone. Going to be very important here as well. Now, last thing I really want to get to here before we jump off. Bitcoin. Is Bitcoin a trap here? Did Bitcoin bulls get trapped here? That's going to be the big question here, because this is what we warned about yet again, because this has been how price has played out over and over again during this decline. Remember, Bitcoin topped out right there. That was October. That was October when it topped out. We called the high on that day, basically, on the 6-day rally, and said, nope, you get a 6-day rally to the edge of a mature trading range, you turn right back down. It turned right back down. And ever since that time, there's a bull trap above the prior pivot high, boom. There's a bull trap above these little highs, boom. These were smaller varieties. That was a smaller variety, and that was the big one that really hit recently, and now we're doing it again. Look at the last time here. This last time, whoosh. This one over here, whoosh. Are we about to see the same type of whoosh again right here in Bitcoin that goes whoosh? Are we headed to 50? So I know I've mentioned before, if we can get that upside break and transition, I wouldn't mind being long swing in Bitcoin for a return back to 88 to 90. But at the same time, right now, this has been a pattern that we've seen over and over again. It just lacks juice, lacks energy, and any aggressive bulls are just getting trapped right now. So if there's a failure here at 70, this could really be bad for Bitcoin moving forward. So what would be bullish though? What would be the bullish thing? And it's what we look for here as well. It's the exact same thing. The bullish response here might be to flush it, hit 69, reject, and then turn higher to close through 75. Do that in one day, and we have ourselves a move. But we haven't seen that even attempt to do that in this entire rotation since October. That's why I've been so bearish Bitcoin and really haven't been believing in the up moves. So, but if we do that, let's go. This thing could be a tremendous buy if we drop and reject and get that great outside rejection. But we're not getting it right now. So you fail at 70 here, this thing could get really bad for Bitcoin. And again, for Ethereum, very similar as well. You're seeing an inability to get beyond and find acceptance beyond that 2150 market structure. We've seen this before as well, and we've seen some big time failures. Now, this one hasn't been as bearish, but at the same time, it just can't find acceptance. Do we rotate again one more leg? So this is going to be interesting here, how this behaves heading into a weekend here. Can these markets find a low this morning? Can they find a low, fade back, or do we start to go big time risk off? That's going to be the big question here as we head into the weekend again. Hey, good morning. Good to see you all today. Welcome to our live stream. I want to say thank you very much for joining me. You can find us in the Discord trading room here. You can see the link in the description below. Our PivotBoss Masters content provides the best proprietary tools for TradingView, Thinkorswim, and we also have the best training for those tools and additional content as well. And as always, thank you very much for joining us. We'll do this again next week. Give me your feedback in the comments below. Give me some tickers you want to see in the next live stream, and we'll do this again. Y'all have a fantastic trading day. I'll see you soon.